Good day everyone. I know a lot of people have been hearing about liquidity, that what is liquidity all about. They don't understand it, and they'll be hearing double top liquidity, trend line liquidity, and they wonder why maybe the reverse set another, like does it follow the trend? There was a break of structure, you marked out your zone, price sniped your stop loss and moved in your direction. That some people will say liquidity. So this video is all about you understanding what liquidity is all about and how you can avoid liquidity, because if you can't spot the liquidity, then you become the liquidity. So liquidity occurs in the forex market where the currency pairs are easily bought or sold. So because they are easily bought or sold at a particular point, that's why markets will trap a lot of people. Let's say, okay, let me give an example in this case. For example, now let's say we're in a downtrend. Market have been creating lower lows and lower highs, lower low, lower high, lower low, lower high. Now, because market knows that at a particular point in time in the market, price is always selling. Like one exact point, price always sells. Let me reduce this a little bit. So at a particular point in the market, they know that price is always selling because you've already put your zone here. You notice that it got mitigated. You have another zone here, got mitigated. Another zone here also got mitigated. But you notice that there will be a point where market will just feel that has a broken structure again. It has given a break of structure to the downside. So you want to mark out your new zone. The next thing you see that price violated it. Now this is a trend line liquidity, because most people would have put that entry here. Most people would have put that entry here, and they want to go on long position, on short position. So that stop loss will be at the week. They want to leave space. But market head knows that a lot of people are very set a pending order at a particular point. So they just want to trap the people, trap the sellers, and it could be in a downtrend. It could be an uptrend too, where to trap the buyers. So that is an example of liquidity. Now there are different types of liquidity. We have the swing low, we have the double top, we have the trend line liquidity, we have the swing high liquidity, we have the double bottom liquidity, and we have the liquidity sweep. Let's move to GBP USD. Now what do you have here? There was a break of structure right here. Sorry. No, let's just move to this side. Before I will discuss what happened here, let's first discuss what happened here. There was a break here. And normally, if you want to mark out your zone based on what you've been taught in the supply and demand zone video, if you've not watched it, you have to go back and check the video. You mark the last buy candle before second led to the break of structure, which was here. This was exactly what happened. You already marked out your zone, expecting that price will respect the normal supply and demand. But see what happened. A lot of people must have seen this, and the way it says that pending order right here. And they'll put the SL at the week. Although they don't leave space, don't leave a little space. Let's just say they left a little gap. They're risking 22 pips, hoping to get 290. Or let's say you're aiming this demand zone right here. That price got mitigated. Yeah, this demand zone right here. You're waiting for it, and price mitigated the zone. So let's say you want to take a trade from here 22 pips and 22 pips to get 314 pips. That is 14 hour, which is very very okay. So you'll be wondering that why is that price hit my stop loss, then moved my direction. Now this is an example of liquidity sweep. Right here you see it here, the one right here. This is liquidity sweep. So a lot of people have already said that pending orders right here. They very set it at this point, and price and market knows that a lot of people have already said, like maybe 1,000 people or even more, a lot of people. So it wants to hit that stop loss. So until it hits that stop loss, price going to move up. They are just sniping that stop. It could just be a tiny wick that will just wick you out. They now go in your direction. That's an example of liquidity sweep. And that scenario is this, although it has not played out, but I'm having feeling that it might play out. There's something about this market. It's not just all about marking your zone and waiting for it to respect it. Market owns liquidity. So if you can't spot the liquidity, you become the liquidity. Right here, there was a break of structure. Let's call it BOS. Yes, it went to your direction and already put your order. Then there was another break. Price failed to mitigate this zone and it gave another break of structure. A lot of people would have marked out this zone, hoping that price will mitigate it. A lot of people would have marked out this zone here. This is still playing out. Yes, it has already marked out, it has already mitigated the zone. And I think it has given a confirmation entry. Don't worry, confirmation entry will be explained in another video. There was a break here that gave a change of car. Oh, sorry. There was a break here which gave a change of character. And very marked out your zone. Yeah, and price tapped into it, which is fine. But one thing is that if price breaks this zone, just if like now, so most people would have been on this trade right here because very gotten confirmation. Yes, it's already going well. But then if price breaks this zone, this form here will be a swing low liquidity. If you check it, this first part, there's a liquidity here that is called swing low because there's an initial break of structure. This first break of structure already marked out your zone right here. Now on that break of structure to the upside. So most people would have wanted to, okay, let me cancel this. Most people would have wanted to mark out this side, wait for price to mitigate it. But see what happened. Price violated the zone and went up. Although it's not every time it happens. Sometimes it will just mitigate the zone and respect the zone. Then later on, after giving 100 pips, it now reverse. That's already happened a lot of times. Okay, I think this is an example. Yeah, this is an example. There was an initial break here. There was a break of structure here, right here. Normally, you mark out your zone. This zone here. Price tapped into it. Yeah, before reversing, but it tapped into it. Then see, there's now on that break here. I want to mark out a zone. This is the zone right here. Price expected it and I think he gave over 50 pips because I took this trade. Well, it gave over 100 pips, 130 pips. It gave 130 pips. So it's not every time it happens that there will be a liquidity here that price just fuel it and come down. No, you can try to expect it. But since that if it doesn't respect that zone, that doesn't mean that it is over, because one thing you need to know is that a lot of people it's stop loss. Even the big men in the market, they still it's stop loss. But the thing is that they have risk management, they maintain their risk, and they make sure that they don't go above a certain risk level. So you don't need to be like, okay, because there isn't a clear break of structure that you just put your entire money on this zone. No, because if this zone fails, they see another zone here, they see another zone here, that three zones here that price could tap into. So you could actually enter from here, but for this trade you have to wait for a confirmation entry. You can have taken this side as a confirmation entry, or you just wait for this zone. And if I don't want to wait for confirmation entry, you would have just set your pending order. You could just risk like that. Long position, you put your entry there, stop loss at the week. This is 13 pips. 30 pips to get over 100 pips. That is 9.6 for hour. That is the risk to reward, which is very okay. So right now it seems that price is even respecting this confirmation, this side perfectly, because it gave a confirmation. If it didn't give a confirmation, you just move to this zone. You know that okay, this is where you are waiting for. But since it gave the confirmation and it's respecting, means that there's no need for you to call this a liquidity. Now let's check another pair. Yeah, this is USDJ pair. I marked out the zone because if you remember from the last video, the one of supply and demand, I made mention of you seeing a zone and you seeing liquidity. Now there's a liquidity here. There's a liquidity right here. Price has not really broken it, but it's still giving first touch, second touch. And you can't call this a trend line. This is CM, but it's just a, let's say, it's a supply zone that price is reacting to several times. This is beginning of the supply zone that price is reacting to. It's giving the first touch, second touch, third touch. If we bring it down to 5 minutes, let's check it. Yeah, this is it. There was a break of structure here. This was the clear break of structure. So you mark the last buy candle led to the break of structure, which was right here. So this is zone that price is reacting to several times from the 5 minutes. It has given the first touch. It gave the first touch here. It failed. It came back for a confirmation entry, because it gave confirmation entry here, which I will explain in probably the next 2 videos, but I'll still explain it. It gave the second touch here. It gave third touch here. Now right here, price already knows that people are taking orders from here because they've been more sales that have been easily being bought from here, because price is easily being bought as soon as it just touches this line. Price is easily bought. Like now, see, price touched this, the third touch, gave the third touch, it's moved up a little bit, but it's still selling. It's still reacted from the zone. So if there's a liquidity grab right now, most SMC traders will see this as liquidity, and they want to not, instead of just selling from here, they will target the next zone, or you just wait for the buy. If price has to hit now, you just wait for the buy. Price comes down here and you buy from there, or it could just continue going up, or you just continue going up like this before it now finally come down. But this is it here. Price is easily bought from here, because it's easily bought. That's why this is a liquidity. So if price wants to take out this liquidity, it won't just take it out by just a tiny wick. To go ahead like it go far before now reacting to it, then it's now for reacting to a zone, probably this supply zone right here. Price might react to this supply zone here before selling down. Now let's check another pair, USD card. Okay, this is an example of double bottom liquidity. I'll show you. There's a break of structure here. There's a break here, and you want to mark out your zone. This is it. Very drawn it out. But then if you check here, you see that price gave a double bottom. So right here is the liquidity that we're waiting for. So because we're seeing a break of structure here, you won't say you want to buy from here. Because there's a break of structure, you won't say you want to buy from here. You have to wait. Because most people will be like, okay, there's a new break that they want to mark out this zone, that is the last sell count that left the break of structure. Then when they hit SL, they will be done saying that they don't understand that they did it exactly. But it seems that they didn't check for liquidity. This liquidity part, most people ignore it, but then it is very, very powerful in the market. Very, very powerful, because price hunts for liquidity. It's not just about marking out your zone. You have to check for liquidity. You can't be saying you want to take this buy beside liquidity, because price it wants to take this out. Price is right here. It wants to take out this liquidity here, so it will surely come down. Look for a demand zone below this liquidity, probably this one. Tap into it and go up. And if it doesn't respect this demand zone, which is fine, you just wait for this one, because there outside there's confirmation. You wait for a confirmation before taking the trade. So if you get a confirmation, if you don't get a confirmation from here, you can get it from here. Price reacts to the zone, taps into your zone and moves up, and that is it. That's exactly it. No two ways to it. So this here is double bottom. If you check this picture, you see double bottom liquidity. This part here. That's what we have here. So like this, I'm already seeing this liquidity here, and I want to sell from here. I've already seen there's a break. Okay, let me move down to the 30 minutes. I think it will be clear there. So there's a break here. Mind you, I know there's liquidity down below. There's a break here. I can choose to pick this side. Okay, if I'm to refine it, let's say I'll refine into this part. Right here. So I can choose to wait for this zone. When price taps into it, I'll target this demand zone. I won't target this one, because that is a liquidity zone. I'll target this demand zone right here. $125 pips. And as price has yet tapped into, oh, sorry about that. And as price has yet tapped into it, I'll wait for a confirmation, and I'll buy from here. This same zone, I'll move up, because we're in an uptrend. We're in an uptrend right here, so there'll be more of buys than sells. So this is what we have here. Sell from here, it's my demand zone, then I'll buy from here, and that's just it. Let's check warm up here. Okay, I think it's giving a trend line liquidity right here. Mind you, if you don't see a clear liquidity, there's no need for you to force it. Now, this is an example of trend line liquidity. This one is uptrend liquidity. Price is noticing that people are selling from here. So drop, tap again, drop. So to get to a stream that price will look for a demand, or maybe it could be news. You just push it up and take out this trend line liquidity to take it up, and that's just it. Because most trend line people that are trading trend line, they'll be selling. They know that it is so. Although it's an uptrend, but them they are selling because once it gives a touch, they want to sell. Give another touch. Because okay, let me say it like this. The people that are trading trend line, they'll sell that others here. No, it will actually be from here because since it has given the second touch, they want to set it here. And the SL won't be something small, it will be something large. Let's say 35 pips now, and they can just be targeting this demand zone. 35 pips to risk 37 pips. This is what they are trading. Most people, this is what they will be trading right here. But us as supply and demand traders, we know that this is liquidity. So we'll buy from here. They buy it, I'll take out liquidity. So instead of just selling there, we'll look for this buy here. Buy from this side. Stop loss here. 6.9 pips. I can put a TP. Let's say the swing high, which is 40 pips. And that's it. Let's check AUD JPY. Yeah, okay, I'm seeing one here. Now I'm waiting for this demand zone here. Since liquidity here, let me increase so that it can be clear. Once price gave the first touch and second touch, a lot of trend line traders will want to buy from here. They want to buy from here. Put that stop loss far like this, and their TP will be here. Okay, let's just say safe TP will be here. Price is reacting to it. Yes, the trade. I'm not trying to say that trend line is bad. No. The idea is to do what also. If you trade trend line, that is fine. If you trade supply and demand, that's fine. But things that us as supply and demand traders, we see this as liquidity. So why them that are buying from here, price could see violate this zone, and you just come and tap into this your demand zone here, and we buy from there. So that's just it about liquidity. There's nothing major about it. There's nothing else about it. Just make sure that you spot your liquidity. Once you are able to spot liquidity in the market, and are able to see that okay, there's a clear break of structure here, you mark out your zone, you are very, very good to go. Your win rate will increase, and it will increase your odds too. So that's just it about liquidity.